Another hike of 50 basis point. Housing sales are down by 49%. More than that, as per Trump Real Estate Board for the month of November. Rentals are crazy hot. Inflation is still at 6.9%. Have you noticed about what happened to your groceries? A basic egg and dairy products are more than 10% expensive from the last year. What will happen to the more interest rates hike which is coming in the future? Are we already in the recession, or the crash in the real estate market is coming? Is this the best time or the worst time to buy or sell? If you have all those questions, we are going to discuss based on the stats that we have for our monthly real estate meetup. Hello everyone, my name is Mandeep Dhesi. I'm leading a team of more than 40 real estate agents as a name of Aspire Group EXP. In today's video, we are going to discuss the first and the foremost, the hottest news. What is happening is we saw another 50 basis point increase by Bank of Canada. Prime lending rate is at 6.45%. It's going to hardly hit your pockets if you are a owner already, or an investor, or you're planning to buy your first home. Why? Because if you take an example, buying a home of $1 million, if you have a mortgage of $1 million, with this 50 bips point increase itself, you are paying $28 extra every month. Those are just basic numbers, but as of now you have already seen 7 increases in the interest rates over the year time frame, which is like 400 basis points. This means if the prime was around 2.45, on a one lucky day, that was 2nd of March, we saw a increase, and then another. As of 7th of December, the prime is at 6.45%. so if you have a variable mortgage, any loan, car loans, you can see the impact already. If you have a housing loan, you can see most of the people have already got letters from the bank giving them a choice: either go for fixed, either put some lump sum payment. There are options they are giving it, right? Or you increase your variable payment mortgages. So why? Because the trigger rate have already hit. If you don't know the trigger rate, let a brief of it. That means your interest rate payments are more than your monthly installments itself. So you're not paying anything on the principal side, but all your money are going to the interest, and the banks are not able to sustain because of the high mortgage rates. They are issuing letters to the people. 50% of the people who are on variable mortgage have already received it. But where these things are going to end? Have you ever thought about it? Because as per the CPI Index, if I go into the Consumer Pricing Index report of October 2022, the inflation numbers were 6.9%. So this means the thing that you bought last year, it is 7%, almost 7% expensive this year. The basic needs are which I'm worried about is the gasoline, which contributes to almost more than 17% to the inflation numbers. Then we have your mortgage interest cost. That's what we discussed already, and it's going up. And then your restaurant food money, it's 7.7%, and the passenger vehicles is 8.1%. These are the stats. It's like 12 month and a 1 month change in the Consumer Pricing Index. Let me simplify it. This means if you are going to buy one egg last year in 2021, and as of today you are paying 13.8% more, and same for dairy products, you are paying 10.6% more. So this is aggregated to create a inflation numbers on a year-on-year basis, which is 6.9%, and the Bank of Canada is dreaming to make it 2 to 3%. That's why they were increasing interest rates so frequently. But the general analysis is to inflation to cool down, it takes time. Everything takes time in your life. So this is what it's going to happen. The interest rates are going so abruptly up. It's going to impact your housing market. It's going to impact your cash flow on the groceries, but inflation will take its own time, maybe 6 months to 1 year. So this is what they have to keep in mind. As of now, 7th of December, we saw another hike just to curb the inflation. Then now the new inflation numbers will be there. Hopefully they are down, because we can see already the gas prices are cooling off. I can see in Toronto, I was driving, it's as of today it's around $1.4 for a gasoline per liter. So that's quite promising. But the basic thing is people are not running on gas. It's okay, the fuel is the basic energy, but they need is food. The food prices are not cooling off. You see the prices for food rose by 10.1% for the month of October. So that's crazy. 10% more you're paying for your fresh vegetables, for your meat, for your fruits, you're paying more. And the interesting fact is, if you love eating pasta like me, fresh pasta prices have gone 44.8% more. Lettuce, right? So rice, and even the rice prices are close to 15% up. That's crazy. That is on the food side. But as of now, we can see the prices are, even the cities are feeling the heat, because property taxes are going up. What we saw in BC, and particularly 8.9% hike in the property prices because people got highest assessment values. On the other side, there is a province which is Manitoba. It's minus 2.8%. So it's happy people living in Manitoba. The prices are going down on the property taxes, but the growth is limited because the growth happens where the action is. It is Toronto, it is Vancouver, it's Montreal, it is Calgary, where the most of the people are moving. So you need to consider, if you're paying high on the prices, obviously there's some benefit out of it. So let's go into the mortgages. So most of you people have questions, what will happen to the mortgage next? It's already 6.45. I saw that letter. Now I have to lock in my rate. I have to pay more lump sum payment. What should I do in that case? So our advice based on the analysis is, we are almost at the peak on the hike of interest rates. This is what even Bank of Canada indicated in the meeting. So we might see a 0 to 25 bips point increase on the next meeting that's happening next year on I think it's 24th or 25th of January that's happening. So we might see it's another spike, but we are already on the peak. And by the springtime, the prices will start consolidated because the inflation will start to cool off. As of now, inflation is still stagnant because we haven't seen the impact. So what will happen is, if you're going for fixed mortgages, think about it, because once prices start coming down, your price will be locked for 4 or 3 years term, and you'll be stuck in that mortgage. And if you want to sell those property, you want to move on, you have to pay half penalty on that. So consider that. Just take advice from mortgage advisor professionals, but make your decisions accordingly. So that's what the number says. We are already on the peak, and as most of the banks are saying, we have already seen 400 basis point increase this year. Let's move on in the housing market. That's the thing. Let's dig deeper. As of now, the numbers purely says that we saw, as per the Toronto Real Estate Board, for the month of November 2022, we saw almost 4,500, more than 4,500 homes getting sold, which is less 49.4% compared to the last November, which was crazy hot at that time. People were crazy buying, selling. They were thinking they'll be left out of the market. Maybe it's going to change because they were under the COVID impact. People thought they need a huge living space. They need all the facilities at their home, like outdoor activities. People are moving away from the cities for the bigger space. When I worked with so many clients, they never thought about they'll be coming back to Toronto. They said, okay, they're working from home. Let me buy some bigger space on the suburbs. Let's invest in that. It was crazy, right? People wanted their own space. They wanted to have the more feeling of ownership. They moved out. And what happens on the other side, because the inflation was still coming up, the cost of building was going high, and there was a tough competition because we already have demand and supply issue in Canada. The prices skyrocketed for the housing, but the affordability issues are still there. But definitely it's impacting the housing market because people are not able to qualify. I can see so many first-time home buyers, they're ready to take the action, but they're hesitating. They're not entering because they feel they're still waiting. But on the other side, I always try to explain them, guys, why you are paying mortgage of your landlord? Why not you invest in yourself? At least you'll be paying for your own mortgages. And if you see the prices are going up for the interest rates, you can see the consolidated adjustment happening in the housing market also. So it might be a right time for them to enter based on their financial condition. But that's what the overall trend is. Even as per the TREB CEO John, he refers, we have seen a lot of progress in the year of housing supply, but as of now we can see we need to build more homes faster. And even the president Kevin mentioned the increased borrowing cost have a short-term shock on the housing market, but over the medium to long-term, demand of ownership is going to pick up. Reason being, have you seen that immigration data coming in? 1.5 million people coming in to Canada. Those are qualified immigrants. Those are not people like students or work permit. They're qualified people coming in on the PR. They already have the equity. Maybe they're from the back home, or they're already jumping into the market, jobs market. They'll be qualified soon. So obviously what they need, a home ownership. So they need to buy, but we can see there's a shortage of the demand and supply issues because there are so many strings attached. If you go for a basement, if you go for a house construction, you have to wait for months, even years for rezoning of the thing. So this means there is a supply and the issue. Definitely we have labor issues on the contracting side. We have a supply issue. The stuff coming from outside, it's taking time on the build side. So everything is slowed down because most of the population is aging. Baby boomers are already retiring. They want more people coming in, paying them the taxes so the economy can boost. So what will happen to the housing market? It's definitely going to put a pressure. But now let's dig deeper into the stats. And this part we're going to talk only purely about the numbers. We saw 4,500 homes got sold. What was hard? Let's say you are seeing, okay, which city might be good for me, where I should invest. As we can see, the Halter region saw 431 homes getting sold. sold with the average price of 1.1 million 56,000. So this means if you have in that price range, the Halton is there for you. And then the Halton area, the hottest, and that's my favorite, it's Oakville. We saw the price around 1.4 million. So the best city to live in. If you talk the Peel region, it's always hot. Peel region, it's going to boom. Definitely it's going to boom in the future also. It comes Brampton, Caledon, Mississauga. We saw 748 homes getting sold with the average price of 1,039,000. The hottest out of that was Caledon, obviously. Then it was Mississauga, 1,022,000 average price, followed by Brampton, it's around million. So and then if you talk about city of Toronto, that's always hottest because it's the downtown, the core, the hub where the action happens. 1,800, almost 1,800 homes got sold with the average price of 1,050,000. Obviously Toronto Central, which is close to the downtown area, the prices are more higher. It saw an average price of 1.1 million. And then we come to York region. It had around 832 homes getting sold with the average price of 1.3 million. So York is expensive. I got so many queries. Okay, I'm not comfortable living in Brampton, Mississauga, Caledon. Why not I move maybe closer to Toronto? Guys, remember, if you're closer to Toronto, you're paying premium for that. That is what York is. York is more closer. If you see, I can the King, the average price is 2.5 million. So that's expensive living in King. And then we have Richmond Hill, obviously 1.3 million. We have Vaughan of 1.3 million, 56, around 60,000. Then we have a Durham, it's cheaper. The average price is around 892,000. It's 900,000 with a sale of 564. Out of Durham, we have Ajax, which saw the average price. The most expensive is Exbridge, followed by Ajax, price of 947,000. Now let's go. I know it's purely numbers. I don't want to bore you that much, but let's see overall. 72,000, more than 72,000 homes got sold as of November. In the Travel Real Estate Board, the most number of homes got sold was obviously City of Toronto, followed by Peel region, 13,600, followed by York, 12,280, and then the Halton, 700, and South, 7,371 homes getting sold. The average price of the home, average days in market is around 21 days. Let's say you're planning to buy a detached home. Maybe you're trying to upgrade yourself. Where you see yourself, which city fits you in. Detached home overall in Toronto Real Estate Board is around 1.4 million. The city which is in the Halton is it's more than 1.4 million. The average price, the hottest one is Oakville. Detached home is average price is 1.8 million. That's crazy expensive in Oakville. Then we have Peel region. The Peel region, Caledon is obviously expensive. It's more than it's close to 1.6 million. It's a land, it's more open space. Followed by Mississauga, more than 1.4 million. And then we have Brampton, close to 1.2 million. So if you're planning to buy detached, you have to see which budget, which area fits in. So the average price in Peel region is 1.3 million. And City of Toronto, it's obviously expensive. Toronto Central's price is around 2.2 million. Then we have a York region. If you're planning to buy in York region, King prices is 2.6 million for a detached. That's the average price. 457 home got sold, followed by Richmond Hill. The average price is 1.8 million. It's expensive. Vaughan is 1.7. And let's move to Durham. If your budget is less than 1 million, I think Durham is good for detached homes if the price is less than that, because average price is 982,000. Ajax is hovering around 1 million. Then we have Pickering, is a bit expensive because you're closer to the Toronto. It's more than 1.even close to 1.2 million. But if you see Brook, 700,000. If you see Clarington, it's 900,000. If you see Oshawa, it is 850,000. So there is opportunities. You need to find it out. Whitby is around million again. Then obviously we have Simcoe area. In Simcoe, Innisfil, the prices is around 900,000. Then Bradford is there around 1,042,000. So those were detached. So if you're planning to buy a detached, you need to figure out which area fits in. Let's go to the semi-detached. The average price is around million, and 386 semis got sold. Most number of semis got sold in Toronto East, followed by Toronto Central, 65 and 64 respectively. And then we saw Brampton got 52 semi-detached. A lot of people are buying homes in Brampton as semis with the average price of 918,000 in Brampton. Then Mississauga 45 with the average price of 900. 984,000. Let's go into the towns. If your budget is less than million, I would say semis might fit your budget, or the townhomes. The average price for the town is around 993, but the cities which I can see the least number of townhome, the prices is Clerington is around 730,000. Then if you talk about Brampton, saw 38 townhomes getting sold with an average price of 870,000. So if you're in that price range, that's a good hit. And then obviously Toronto Central is 1.5 million, followed by we have Aurora around million, and then King 875,000. So King is expensive and detached, but you can get deals on the townhomes. Obviously, let's move on. If you're looking for condo townhomes, average price is around 800,000. 58 condo towns got sold in Halton with the average price of 812,000. Then Peel got 97 sold, which excites me. Mississauga had 68 condo townhomes getting sold with the average price of 782,000. So that's a good price range for first-time home buyers to be in the Mississauga area. Oshawa obviously around 500,000. That's a good deal if you're in Durham area. So now let's move on. Overall, if you see the numbers, definitely people might be interested in the condo apartments also. If you're in the condo apartment, the average price is 700. Obviously the downtown areas like Toronto will see the most number of sales. We have Toronto Central, the average price is around 800,000, and then which saw around 600 condo apartments getting sold. And definitely if you talk about Halton, 72 got sold, followed by Peel. In Peel, Mississauga got 118 condo apartments, a lot of condo apartments in Mississauga with the average price of 600. So that's a good number to look into. If you're looking into Peel region, the average price is around 600 itself. Ajax obviously around 500,000, and Whitby is still around 600,000, right? Orangeville, if you're looking in Orangeville, it's around 442,000, but there's very limited supply of condo apartments. Just to summarize, overall numbers look good, numbers look promising, because I'm looking into the historical annual statistics. That's what they say. Long, and if you're in medium and long term, you're always going to make money in the housing. A home average price of a home in 2010 was 431,000, which got almost double up in 2017 to 822,000 for an average home itself. And now, as of now, if I see in 2022, the average price is around 1.2 million. So you can imagine somebody bought a home in 2010 for 400,000. It is 3 times in 2022, irrespective of what is happening on the inflation, what is happening in the interest rate scenario, world war issues. The prices are still 1.2 million. So people have made money in the long run. Definitely the people who bought in the high peaks of this year, maybe in January or February, they might be burned out seeing all this news, but in the long run, if they have the capability to hold for maybe 1 or 2 or 3 years, definitely they're going to make more money, because inflation is going to come down, interest rates going to flatten it out, and the people are waiting. The buyers, sellers, they need to jump into the market. People cannot hold. What will happen in the next year when more immigrants coming in? If you're not buying, you're wasting, or I will say burning your money. So, but obviously you need to buy as per your affordability, as per your scenario, as per your life scenarios. Let's start something small, and you can improvise as you go. So this is what we have on the rental, just to support you what is happening in the rental market. Hopefully you like this video. I know there's a lot of numbers, a lot of knowledge flowing in, but sometimes I believe knowledge is good. I'll share the link for the statistics, price increase, CPI numbers in the description, so you can go into the details. So just keep yourself updated. Thank you guys. Thanks for watching our another amazing video. Do press the subscribe link and like, and press the thumb button to like this video, and also share in network. Till the next stats, and enjoy your holidays. Thank you.